The investment stuff we could do quite well, and paying attention to the little details would be an important differentiator.
Do right by our clients, offer them more, but also create incentive for us to participate in growth.
Welcome to Decision Points. I'm Scott Wood, and I'm here today with Matt Dublin and Brett Hoover. Guys, thanks for being here.
Thanks for having us.
Yeah, you bet. So in from Atlanta and West Coast. A little humid today for you.
Yeah, or a lot.
Yeah, a lot.
It's something of a relief for me coming from Georgia where it's been so hot.
Yeah, so it's a little better here.
Yes.
Yeah.
Yeah.
Well, guys, it's a pleasure to have you all here. Thank you for taking the time to do this. For our listeners, Brett and Matt have joined True North in the last 60 days and are partners with us now, and we're super excited about our future together. But you guys had founded Blue Investment Partners about 6 years ago, right?
Yeah,
2019.
6 years August.
Yeah,
Yes.
yeah.
a little 6 years plus, but by the time I moved in kind of ready to go, it was summer of 2019.
Yeah, perfect. Well, we're going to talk a lot about Blue, but before we do that, maybe just a little bit of background on you guys. Matt, where'd you grow up?
Yeah, so I grew up in Davis, California. Come from a family of physicians, and I guess I was the black sheep in the family, the one who didn't pursue medicine, and went to Cal Berkeley undergrad and lived in San Francisco and started a career in finance and worked for a variety of different hedge funds. Was on the buy side, asset management side, the bulk of my career until Brett and I started the business in 2019.
Perfect. So all your family physicians, how did you navigate, what was the decision point to not
back
go
up
into
a little bit.
medicine?
So I'm 8 generations in Northern California. My grandfather's the first not to be a physician.
Wow.
And father's a physician, uncle, great uncle, 2 cousins are physicians, and it just wasn't something I wanted to pursue as an undergrad, despite pressure from my parents my junior year to keep taking the chemistry classes. I actually thought I was going to be a lawyer when I was set to graduate, and had a last minute change of heart and scrambled to get a grunt job at Montgomery Asset Management, and started working hard and studying for my CFA, and back to business school for a couple of years, and back onto the buy side.
Where'd you go to business school?
Georgetown University.
Okay. Awesome. Yeah, great. And Brett, what about you?
Yeah, by the way, it's amazing, the lineage in California, it's so atypical.
8 generations.
Oftentimes people come to California, they're first, second generation, maybe third, but 7 plus for 8. Yeah, it's amazing.
That is amazing.
I was born in Jersey City. We moved out to Southern California for a little bit, then Northern California, where I went to high school and what have you. I always wanted to work in finance. It was finance and financial markets. Probably my interest started in middle school, and that was a focus. So I was lucky enough to get into Cal. I have 3 brothers younger than me. We're all kind of really close in age, and my dad was like, I need you guys to go to a state school. So luckily, I got into Cal and went to Cal, studied economics, and right away wanted to find my way in finance, and worked at Franklin Funds, worked at Charles Schwab, ultimately moved over to Hewlett-Packard Pension, and we managed the pension fund for U.S. employees. That was kind of my first big foray into investment management, managing money, understanding markets better, what have you. Went to Bear Stearns from there. Worked for a large family office, multi-billion-dollar family office, managing money for the family and
while at
outside
Bear Stearns,
investors.
or
No, post Bear Stearns. Then back to Bear Stearns, which was acquired by J.P. Morgan. So then I spent years at J.P. Morgan in the investment bank, sales and trading, equity capital markets. Moved over to the custody side, did custody and financing for hedge funds and big family offices. So kind of understanding a little bit more about the kind of call it post-trade world and financing different assets and what have you. By the way, I could write a book based on all the stuff I've seen over the years, including at Bear Stearns. Then J.P. Morgan asked me about. I had a very good relationship with a number of principals at asset management firms, private equity, hedge funds, long-only managers, and they asked me, "Would you be interested in covering them and helping them manage their own balance sheet as opposed to other people's money?" And because oftentimes that cohort, they're like the cobbler without the shoes. They're very good at managing other people's money.
Yeah.
They're not very good at managing their own and their own balance sheet and don't pay enough attention to it. So I moved over to the private bank. I was living in the San Francisco Bay Area, commuting to LA with an eye toward every Monday morning, with an eye toward moving down there eventually with my family. Once my youngest went off to college, we decided that it might not, my wife was like, I don't know if I want to do this. And I was like, well, if I want to put 10 plus years into something and building something, it's time for me to think about doing my own thing.
Yeah.
And that was really the genesis of Blue. And Matt and I started talking about it. We belonged to the same club up in Northern California and had a bunch of mutual friends. And
Nice. Let's pause here for 1 second. All right, so I want to go back to Matt. So a little more detailed, Matt, on your background. And you mentioned Montgomery right out of school.
Right. Traditional long-only asset manager, and was just learning the ropes at that point. It was kind of doing a little bit of everything, but not predominantly on the investment side, more on sort of the operations side, right?
Got it.
Back to business school, kind of expand my toolkit, so to speak, and didn't anticipate it, but got hired by Montgomery out of business school. It was actually the best job offer.
How did you pick Georgetown?
Yeah, it was, I guess it was the best business school I got into, variety of factors, but I was also born in the area.
Okay.
I was born in Falls Church, Virginia.
Okay.
And had some friends that lived out in the area and had traveled and visited and thought it would be a great multicultural experience, and near the nation's capital, and it's super interesting place to live, and miles away from home.
Right.
Hopped in the car and drove across the country by myself to go to school.
Yeah.
My parents kind of chuckle and laugh about that. Just kind of waved me goodbye in the driveway. Good luck. We'll figure it out.
Yeah.
Yep.
That's good.
Days without cell phones, you weren't tracking every step of your kids at that point in time.
Right.
And so I got hired by Montgomery onto their global equity team, and I had a job as a utilities and healthcare analyst. It was the open spot on the team, and through some mutual friends in the city, got introduced to Andor, which was a spin out of Pequot, which was a large New York tech hedge fund. And they were launching a product. They were launching a healthcare team. They needed a healthcare analyst. And the hedge fund world was a bit new to me. I think it was a bit new to everyone at the time. I mean, obviously it'd been around forever, but kind of hadn't developed the cachet that big hedge funds had at that point in time. And kind of fast forwarding, I spent the bulk of my career working for hedge funds. The most recent stop was Citadel, and the models had changed a lot, right? I had been, I don't say indoctrinated, but taught a way of investing that was more patient and had kind of a long-only flavor to it. But the hedge fund and the majority of dollars were migrating to these multi-manager platforms, the Millennium Citadels of the world, tight risk controls, highly levered, factor controls. It was, you became a risk manager, not an investor.
Right.
And I didn't love it. And I'll give my wife some credit, because two times professionally where she told me, you got to get a different job. I could tell you're working hard and you're not enjoying it.
Yeah. I like your wives already, by the way, because your wife basically challenged you, and then your wife challenged you. Yeah.
Yeah. So I wasn't loving my situation. And Brett and I had known each other socially for a number of years and had a little bit of professional overlap. One of the hedge funds I worked for had a business relationship with probably
J.P. Morgan.
It was a Bear, J.P. Morgan.
And is that how you guys initially met? Was through that relationship?
We were in the same, we had, back when I was on the buy side, also at a hedge fund, we had the same coverage, like the salespeople called on us. And so it'd be like, sometimes we probably even shared meetings at various times, because I also covered healthcare, specifically medical devices, and Matt, which overlap with Matt. So it was, it's a relatively small community in San Francisco.
Very small.
So, so there was a lot of overlap from that perspective, and some mutual friends. And so, not many degrees of separation.
Yep.
So keep going. So
so we knew each other socially, and I think, to be honest, I think I was at his house on New Year's Eve or something. We were kicking around the idea of both maybe griping,
making a change,
work situation, and contemplating a change, but it was just an idea at that point in time. Right?
So who teed that up? Like, and after how many cocktails?
I wanted to do it. I had been thinking about it.
So you were already kind of committed to making a change.
And
you were maybe expressing, hey, I'm thinking about doing this.
And Matt, and I knew Matt, among other people, I just felt like Matt was, we probably talked about it at a party or something like that, just briefly. Here's what I'm thinking about. And it organically came together. We had a series of discussions and a series of meetings about what the concept might look like. And of course, I was still at JP Morgan. So Matt spent a lot of time working on the foundation for the business while I was still at JP Morgan. And I want to call it trying to get out, but I had a fantastic relationship with JP Morgan and the people at JP Morgan.
Yeah.
And, one of my old bosses, who was a very, very, very senior at JP Morgan in New York, like, is a client and encouraged me to do this. So it was like with Matt and I was kind of half doing the work while I was exiting JP Morgan. And it took a while for me to get out, probably 6 months longer than I wanted. But they made it worth my while, because they wanted to transition my accounts best. So they said, hang around, let's transition. It's an important client base, and we'll make it worth your while, which they did. So meanwhile, Matt is doing all the work in the background.
So you've already exited and left. Your last.
He's, it's just, for a second, it's funny. They say inevitably you become your parents, right? We all joke and say, no way, right? I'm not going to become, I love my dad to death, but I'm not going to become my dad. But there was a desire to do something entrepreneurial. When I look back at it, my dad had done the same thing professionally as a physician and started his own business, which was subsequently acquired. So I guess I, in some shape or form, beginning.
Right.
But there was a desire after working for these large organizations to take control of the situation, do things on your own terms, and design a business that's done where you do things the right way, but you do it your way, right?
That's right.
And I think Brett and I were very aligned from day one on how we were going to approach this.
And so you were 6 months or so kind of out on your own, trying to set things up.
Right.
You're trying to unwind from JP Morgan and talking to potential clients at this point, or just trying to get the operational infrastructure in place?
Mostly in my case, I was talking with mostly my friends and peers who are entrepreneurs about whether it made sense to do. And then once I became convinced that it made sense to do, and I had support, meaning, friends who, and Matt, also friends who said, yeah, if you guys do that, I'm interested.
We're behind
Help
you.
me right away. And so Matt talked about like doing it. I think everybody thinks they're going to do it right, and everybody's got the priorities of, it's like everybody thinks they're above average, but there were aspects to helping people manage their wealth and their balance sheet that we thought we could do better, being smaller and more agile, rather than with an often heavy hand that you might sometimes see at bigger firms, and very, very, very focused on each individual client, each individual account. We figured that the investment stuff we figured collectively we could do quite well. And paying attention to the little details would be an important differentiator. So we were like, let's go. Let's do it.
Yeah.
And to be honest, we launched it and, COVID hit 6 months later.
Yeah.
But we took all of that in stride. The clients took it in stride. And it's like we never looked back.
Yeah.
It was like there was never what did we do?
Yeah, once you cross the chasm, you're not going back.
No,
right? Like once you mentally get to that place where you're like, we're doing this, there's no going back.
I have a
you
client.
Have to burn the boats, right?
Yep.
I have a client who said that to me.
Yeah.
He's like, you will never look back.
Yeah.
You'll never regret it. And, that's easy to say, but in fact, that ended up being the case. And so, so we've been
So
blessed.
did you have like a couple of tenants or a handful of tenants when you started? I mean, you've already said like individual attention to each client, individual attention to each account, managing the little things. And I always like to say, people want a silver bullet in our business. I'm like, there's no silver bullet. It's just doing all the little things consistently compounded over decades is what creates great results.
Yeah.
But did you guys have a few tenants that were sort of core to?
Yeah. We weren't desirous of building a business that had hundreds of relationships and thousands of accounts. That kind of speaks to what Brett was saying about having strong relationships with each individual client and pay attention to all the small details for each client. But we had a very kind of purpose-built portfolio for clients, or we had a very clear idea of how we were going to structure portfolios and the vehicles we were going to use. And we were relying to some extent on a lot of our prior investment experience. We've been in high fee models and low fee models and seen the inside of kind of every investment vehicle a client could use, and had a general sense for how we could optimize accounts for clients. And oftentimes when we got a look at their existing accounts and portfolios, they were not optimized from our perspective. And it could be small things, like they just weren't managing cash properly.
Right.
Or just too many
the
really complex,
small
too many
things add up.
positions.
Yeah.
Big time.
Yeah. That's one of the things I've appreciated just, about getting to know you guys is the incredible attention to detail. Cash sitting in cash versus money market versus, a short-term fixed income instrument, and just how to maximize every little thing.
Yeah. And tax and fee friction is super important. Trying to generate tax alpha. Most of the money that we have from our clients is taxable. So we have the ability to add value, and it's almost hidden. It's almost in the background. Minimizing tax friction, booking losses when you can, and swapping into other vehicles. That's been a big thing. But we've also been, and it's interesting because 6 years hence, there's never been like oh my God, what did we do? We have to pivot. It's been fairly, it's been quite methodical. And even like when you talk about tenants, like growing and building the business and the infrastructure, what was on our mind when we started is the same thing that was on our mind when we started talking with True North. It was, how do we will build a business which will grow by word of mouth. We're not big. We're not marketers. We're not, we're somewhat maybe introverted in many respects, but if we want to talk about finance and markets and stuff, we can do that all day long with anybody.
Right.
But grow it by word of mouth. Have people really asking us, hey, we'd like to be a client. Let's talk about our situation, see if it fits, that type of thing. So we did that. Then it was, from day one, in terms of building capabilities and infrastructure, do we do it ourselves? How long can we do that? Do we buy another practice and capability? Do we build? Do we add people and capabilities? Or do we merge and I don't even want to say sell, because we're not cashing out, we're merging, do we merge into another operation which can add the resources for the client base? And that from the beginning was how we thought about the growth. And we talked to our friends, like the wholesalers who cover us and what have you, and I've conveyed to them every time.
Yeah.
We're interested in buying, building, merging. We want the capabilities for this client base. And as the business grows organically, which it did, I think in our entire history, we never had a quarter where we were down sequentially, like, and through some volatile markets and stuff.
Sure.
Steady. Learn more about markets and what clients want, and then try and fill in capabilities. And how do we do that?
Yeah.
So that's how we thought about it from day one.
Well, and so you guys, grew to 350 million-ish, right?
Yep.
And that was over about a 6-year period of time, sequentially, methodically, every quarter over quarter, adding new relationships.
I think it was like 30 million at our first
or less
ADV tool.
Well, first ADV.
Yeah.
It was end of 2019 was 30.
Yeah.
And,
so a couple things, just for those who are going to be listening, you hadn't added any staff all the way through, so you made an intentional decision to keep it lean and mean and small, which meant you guys were doing a lot of
everything,
things that maybe weren't you weren't optimized for, or in your area of giftedness, so to speak. But you made an intentional decision to keep it small. Talk about that.
Yeah. And we also recognize there's a half-life to certain things we know, like planning tactics, for example, and staying up with the regulatory stuff and tax rules and what have you. So we were cognizant of the fact that our ability to focus on that was limited by, other things, including our managing of the portfolios and understanding what the vendors can provide and systems and what have you. But the ecosystem for supporting an advisor is deep and broad.
Yeah.
And so we were, I think, smart in evaluating tools that we could use for productivity and research and reporting and what have you. And we took advantage of those tools. Tech was our biggest line item. Yeah. Even when we were renting offices in Bishop Ranch in the Bay Area.
Yeah.
We spent more on tech than anything else pretty much from day one. And, we didn't always have the best tools, but if we didn't, we went and found a better tool for what we needed. So that helped us be productive. And we split duties.
Yeah, so let's talk about that. How did you, Matt, what were sort of your duties, maybe in the beginning and then like by year 6? Yeah. And same for you, Brett, like in the beginning and then by year 6, and how did it evolve over the 6 years?
Yeah, and so you can imagine with business formation, and we were fortunate to know some individuals that are pretty senior at Schwab and another firm, AssetMark, so great familiarity with the software stack and what was available to us and sort of pointed us in the right direction. And we started with a lot and weaned it down to less than a lot. Right? Yeah. So we realized some of that software just didn't kind of meet the needs of our clients, but yeah, and you've got to do due diligence on compliance attorneys and what custodian do you use and what sort of analytic tools do we need to build the portfolios for clients, and how do you register an LLC, and what reporting requirements do you have, and what sort of monthly compliance requirements do you have, and there's a fair amount. And then how do we kind of manage the day-to-day trading client accounts and managing cash balances, and there's something about that was quite consistent with how we had designed the business, and Brett's point earlier on about the kind of tight relationship with clients. I mean, the more you hand off to somebody else, the more risk there is that something could go awry, but you're responsible for it, right? So every day when we're making the trades or we're balancing cash or we're managing client paperwork to get accounts open, we're taking responsibility for that. We want to make sure that process is run correctly from start to finish, and you actually build a relationship with a client through that process, right? Because you got to kind of, and there's some fits and starts with that, right? Inevitably, but to Brett's point, we never got to the point where like, oh my gosh, what have we done? Right? We're off the rails and this, and we need to redirect the business and go somewhere else. And and I think our skill sets, while very similar, there's that kind of traditional Venn diagram. There was a lot that met in the middle, right? But we have different personalities and different styles, but we have managed to be interchangeable in many aspects of the business.
Yeah.
And you have, we both know kind of who our client relationships are, but at the same time, we're both very familiar with each of those clients and what they need. And if Rhett's on a plane and I'm in the office or vice versa, we have no problem substituting, one for the other and taking care of tasks.
Right.
Yeah. Very, I'd say collaborative. I mean, everything that we do, we talk with each other about, hey, what do you think about this? What do you think about that? And I am purposefully, I probably over-communicate to everything. But I'd rather...
I've learned that about you.
I'd rather...
It's a good thing.
I'd rather...
We should check the average number of phone calls.
That's a good
Oh
thing.
my goodness.
Wait, phone calls and chat messages, right? It's I'd say draw the line at 25 phone calls, and I'll take the over on that.
Yeah, and 200 messages
So
per day.
Is there one of you who's sort of like the lead thinker on portfolio management, or do you both sort of do that together?
We do a lot of it together.
Yeah, and certainly...
I would think that given your backgrounds, because you both have an investment background.
Yeah, and certainly we don't make a decision without both of us being on board.
Yeah.
A decision meaning like a tactical shift or something like that. No. The way we manage the individual client portfolios depends first and foremost on that client.
For sure.
And their priorities.
For sure.
So if we're introducing a holding that might be more volatile, potentially more risky, but potentially more upside, of course, and the client, we each know our clients well, we believe. And if it's more a risk-embracing client, we're going to make it bigger. Like I'm going to make it bigger in that client's account. Matt's going to make it bigger or smaller. So, and then we'll check each other. Like, hey, I'm looking at all the accounts and, maybe some of the weights in this or that holding. Does that make sense? We'll ask each other, does that make sense? Or are you intentionally doing it this way or that? But
I can't think of maybe one instance, maybe two. I'm struggling to think of one where one of us said, I'm doing this, and the other said, I'm not doing it.
Yeah. That doesn't work for very long.
No. It's more shades of gray to Brett's point, right? Like he might have been a little bigger in this position. He felt a little more strongly about it, and I think it's a good idea, but I'm not yet on board with it being a great idea, so I'm going to do it, but I don't do it in the same size or vice versa.
Yeah. I think it's hard enough.
Right.
The whole markets and investing is an art.
Yeah.
And you can be humbled. You can be made to look like a genius. Oftentimes it's kind of the ebb and flow of style that might make a difference, but and you can't get too big of a head,
right? So let's transition a little bit. So just to set up the next few minutes, you guys have had an incredible practice, 350 million of AUM. It's largely been the two of you, no support staff to speak of. And so now, everything's kind of cruising along. I mean, really, like things are going well, markets are good. But how did you get to the decision of, joining a True North?
And I started down that road a little bit earlier. So when it came down to the business had momentum, was largely de-risked. That is, it's a sustainable entity. You can always be humbled by markets and clients who just aren't satisfied or whatever. But luckily we've had no churn.
Yeah.
So the business had nice momentum, and many of our clients have fairly significant private holdings. That is, assets that haven't yet, they don't have liquidity in those holdings. So we started thinking, are the capabilities that we have, Matt and I, strong enough to support this client base over the longer term as they realize liquidity, and God willing, they're still clients.
Looking ahead at what their needs are going to be.
Big time.
Yeah.
So so on the buy, build, merge scale, you think about, and we've been approached, by the way, by dozens. How many emails do you think you've received or calls from other firms? You know, you're on the radar.
Yes.
And so you're getting calls and, hey, would you be interested? This. So on the buy, build, merge process, if we were to buy or build a practice by hiring people or buying a practice, there's risk associated with that.
Yeah.
And at a time, you need to figure it out. Hey, is this working? Does it make sense? Are the capabilities what we need for this client base? What have you? And it might be a year, 18 months before you can really determine if it's working for you, which is risky, not to us, to our clients. We don't want the clients necessarily be guinea pigs on this journey. So we felt like merging our business into a bigger practice that has those capabilities for this client base and what we envision the client base will be going forward should be the number one priority. And it was, if we can do right for this client base, that's all that matters.
Yeah.
And we'll be happy as business people and entrepreneurs, and we'll go down the road for another 10 plus years with this client base. So that's what we did. And then,
I mean, we very well could have just continued on with our business.
Very much so.
Absolutely.
Yeah.
And
Absolutely.
we were cognizant there were risks there, but we felt like, hey, we'd managed through some, I won't even say growing pains, right? But we figured out how to start a business from scratch and get it to this point. So we figured we can probably figure it out from this point forward.
That's right.
And we could probably pretty comfortably double the size of the assets. Not double the number of relationships, because we didn't necessarily want to do that, but we probably could have managed it just the two of us.
Yeah.
But we realized there were some risks to the business. And thinking about Brett's comments there about buying, after having spent the time with the True North team and going through an integration, I realized the clarity of hindsight, we were not well equipped at all to potentially
there would have been there probably would have been some surprises if we tried to.
I think about that.
The integration list is long and detailed. Yeah.
It is.
Right. So we were not well equipped to do that. We could have hired someone, but as Brett pointed out, there's risk of time and money if you get that hire wrong. And again, it was, how do we keep existing clients well served and looking forward a few years as their wealth grows and they get their needs become more complex? Do we have the tools to address that? I think we were comfortable we could figure that out, but not with 100% certainty, right? So we were looking for a solution.
The whole road is just trying to put ourselves in a position where we don't know for sure it's going to be good and work well, but that where the odds are higher.
That's right.
That we can do well.
That's right.
Do well for the client. That's it.
So you're getting dozens of calls, like every RA in the country from every type of shop. So what was the difference when Mac or Nicole or whoever from Wealth Partners sort of reached out? What was the initial thing that piqued your interest that you were like, maybe we should have a follow up?
There were, and I'll let Brett address this as well, but there. The groups we spoke with who were larger, more complex, didn't have the same kind of entrepreneurial feel that True North does. And that, so the culture and the fit was incredibly important to us, right? And you can only determine if that exists and it is right if you spend a lot of time with those people.
That's right.
We spent a fair amount of time with, Brett will say you had kind of dozens of people. Well, it's dozens in the funnel, which turns into conversations with 2 or 3 of them, right? You know right away after a conversation, this is not the right fit for us. This is, this is the Costco of RAs, right? You can't differentiate one from the other, and they're just buying businesses for the sake of buying businesses.
That's
right? They're just growing for the sake of growth.
That's right.
Yeah, there were 2 that we talked to in earnest. Really one quite a bit, a West Coast based firm, and we liked them, and we like the people in the process and stuff, but it did feel maybe a little big, and maybe the client base, the client type and the client profile was different enough where we kind of wondered whether it might make sense. But I received, the genesis with True North was, I received an email from Nicole at Wealth Partners in July of 2024.
Okay. Yeah.
And so it's amazing because our merger closed here on June 30th, and we had the press release went out on July 14th. So,
by the way, I probably got the same email as well. And deleted it by chance.
Well,
I'm glad Brett paid attention.
There's some, and I told this to Nicole, and I went back and I looked at the traffic between.
Sorry, Nicole, if you hear that.
Yeah. Nicole and Mac, they're amazing. The Wealth Partners group is just amazing. So Nicole emailed me, and I think I ignored it.
Yeah.
And maybe just looked at it quickly. And then I about a week later, she sent another just kind of reminder, and I looked at it and I said, and she mentioned True North, and I said, I know that name. There's an old colleague who is in private wealth, private banking in Dallas. Years ago, a few years ago, we had talked, and she said to me, hey, do you know True North advisors? They sound very similar to you, kind of, the approach, the client base, what have you. And so I saw the True North name in Nicole's email, and I responded back and I said, yeah, I'd love to have a discussion. And had a discussion in August of last year with Mac and Nicole, understanding a little more about True North and what Wealth Partners was doing with HGGC and what have you. And fast forward a couple more discussions. We had a kind of high level valuation framework, what a deal might look like, call, and that might have been in, I don't know, September, October of 24. And we said, that's great, the valuation framework, whatever. That doesn't mean anything if we need to understand the culture, the IP, the people, the process, the client type, where they've had strengths, where they've had weaknesses. We want to understand that whole
piece
before doing anything,
Yeah.
and before even proceeding on the economics discussion, because we're doing this because we want the capabilities for a great business over time to service this client base. So a whole series of calls with folks from True North and John Copeland from Wealth Partners, for example. That was one of the calls, but a series of calls. We came here in December of 24 for a full day with the team. More calls, more discussions. And then in February, Matt and I talked, and I said, I want to tell Mac we're ready to proceed to like a letter of intent. And that was probably late February of 25. And so the one thing about all the discussions with True North and Wealth Partners, there was never an instance where, even for a second, where it was like, what did we just hear? That doesn't make sense.
Right.
Or I'm not sure that works for us. Or right? I mean, that was my feeling. It was just, it always felt good and reinforcing.
I think I felt a little earlier on than Brett that it was right and kind of wanted to go and was.
Matt did.
I'm like, hey, life's short. Let's take on another adventure here. I mean,
I can see that between the two of you.
It's been a 6-year adventure, and let's take another. But in all seriousness, for the right reasons, kind of felt like, hey, well, we're very cognizant you only get one opportunity to do this.
Right? Oh yeah, very much so.
And we talked a lot about, hey, we own the firm, we make our own decisions, we're calling all the shots.
That's right.
Are you willing to relinquish that?
Yeah.
And it's tough to get over that. We got over that, and then it's like, okay, now are they the right folks for our one opportunity to do this deal?
So let's talk about that for a second. So you mentioned, a few minutes ago, and Brett, you did as well, about wanting to do your own thing, taking some entrepreneurial risk. Yeah. Obviously, you did that with Blue. To some, this would feel like, okay, now you're putting that, on the shelf, or you're not, you're no longer that entrepreneur or whatever.
Yeah.
It's not really true. It's still a very entrepreneurial venture, and now we're doing it together versus independent. But talk about just how you process that aspect of the decision, because I think that's a really important hurdle for people to have to get over.
Yeah.
So talk about that for a minute.
Right. I mean, to some extent, kind of, you guys have built a phenomenal business, right? But you've kind of laid out a runway for growth and an opportunity that is large, right? Mm-hmm. That's compelling in and of itself. That has a bit of an entrepreneurial feel to it, right? And there's also sort of this growth opportunity for us to grow within the organization, develop additional tools and resources, utilize your tools and resources.
Yep.
I should say capabilities, develop our own capabilities. And again, I don't think it's a risk for the clients. I think it's fantastic for the clients because they're getting a lot more out of it. But it's a risk for us. So that it's still got that entrepreneurial element of, and so it'll take time to, hey, did we do the right thing? So far, it certainly feels like we did the right thing.
Yeah.
Right?
Yeah, it feels like there's an asymmetry in the favor of the clients for sure, in terms of additional capabilities in IP that can improve the odds of good outcomes for them, which is a huge priority, which obviously is our main singular focus. So in terms of, say, relinquishing duties and what have you, I don't really view it that way. I mean, it's all incremental, and what we've liked about True North and Wealth Partners as well is let's keep doing what you're doing. Let's augment where appropriate, where needed, what you're doing with the True North infrastructure. And True North, just like Blue, is a living, breathing thing.
That's right.
There's a focus on growth. There's a focus on growing smartly. There's a focus on adding people and capabilities all the time that we feel like we're very much going to be a part of. And the discussions with the team, and it's an incredible team. You have close to 70 people here, and for I call it relatively small firm, because there's advisors, there's RAs out there, 50 billion, 100 billion, 300 billion, what have you, huge. And so the infrastructure is here and the capabilities are here to support a much bigger asset base and client base. And we felt like, oh my gosh, like, how can we not be bullish on this? And I've said to you, I'm so bullish on True North. So in effect, we're exchanging our interests in Blue into True North, and we've been welcomed by the team, and the team wants to understand what we've done. Like you've said it, like, we want to understand your secret sauce. And there's an earnest curiosity by the team here and by us in True North. And ideally, we're going to be be 1 + you say 1 + 1 = 3.
That's where I was going next. So go ahead. Yeah. I know that doesn't compute for some people, but
certainly it feels like more than 1 + 1 = way more than 3. So
yeah, we could have joined a larger organization and probably just kind of left our own druthers and keep doing what you're doing. Manage your clients and we got some additional bells and whistles for you, and maybe we help you market your business a little. And that wasn't compelling or attractive to us. That the opportunity to grow the business and maybe have some say in how you grow the business. And like Brett said, this was not a cash out and go to the beach transaction for us. This was do right by our clients, offer them more, but also create incentive for us to participate in growth in the business.
Well, I think there's a couple, there's 3 things here. I'll try to remember to get to all of them. But the first thing is that the approach that we're now taking together is a different approach, right? It's not the, hey, snap your practice in here, keep doing what you're doing. Let's just push all the cash flow to the bottom line, arbitrage the multiple, and somewhere down the road we'll take advantage of that opportunity.
That would not work. That's not what I want.
It's a very different approach, which on the one hand probably forces us to go a little bit slower as an organization because some people want the easy, I call it the easy path or the easy button, right? And what we're saying is no, culture's got to fit. It's got to, we've got to kind of align around what we're trying to do. There's an integration to this that really, if we do it right, creates incredible leverage from an enterprise value creation, but that takes longer, right? It's much harder to fully integrate than it is to just bolt on and keep doing what you're doing. And so I think we've created something that, it's a natural filter for the right people and the folks that, might, do better somewhere else. So that's one thing that kind of shows up, I think, in these conversations. The second thing, which you mentioned, is the 1 + 1 = 3. And I think that's where that integration really comes to bear, because if you're truly integrated, then you can start to help each other leverage, and you guys have already benefited us as an organization just in the, very short period of time. We're doing these, weekly BD calls, and, we're talking about this potential new client that we're working on. Actually, we're working on them in Dallas, but they live in California, so there's some connectivity there. But you guys have been helpful on some specific things to California that I don't think our team was as up to speed on. And then we're talking to another advisor in your area out there in California, which the ability to go play golf and have dinner and Zoom call or whatever just extends the reach, right? And so I'm already seeing and feeling the benefits of having you guys on board in that 1 + 1 = 3 approach.
Yeah, and that speaks to your open-mindedness and the team's open-mindedness about hearing other ideas and approaches, and and vice versa, for sure.
Yeah,
it's like I want to say it's like we hit the ground running because we're kind of drinking out of a fire hose
for sure
now, but we have situations where even with the planning team, our clients' lives are going on despite this merger, and
right?
Things are happening. So I did a call with Caleb from the planning team on a client situation. They're looking to purchase something, within the family, purchase an asset, and kind of like, how's the best way to do it? And there's probably 5 approaches that you really need to think about. And there were 4 that I knew, but Caleb had the 5th. So it's like the extra, one extra little thing that can make a difference.
Yeah.
And I've experienced that twice already with client situations, very similar situations.
That's great.
That's what we're hoping for.
That's great.
Big time.
Well, one last thing I'll say, this is the third thing, so I didn't forget, about just coming together is, and you guys have experienced this over the last 6 years, sometimes when it's just the two of you, it's hard, right? Because, it's just been the two of you guys, right? And, for a long time, Mark and I felt like it was just the two of us. We did have a team and we had a staff and they were very talented, but, when you think about, your personal liability and personal risk that you're taking to build a business, it was just the two of us for a long time. And then as we began to add more partners, it got a little easier to push the rock up the hill. Yeah. And one of the things that we've learned over the last 10 years really is, if we can find great partners, and we can all align together around a common vision and a common goal, like it starts to get really fun. Yeah. And nobody's having to push the rock up the hill by themselves. Yeah. Right. We're all pushing the rock the same direction, and we can probably go a little further and a little faster if we're doing it together. Yeah. So that's been a big learning for us over the last decade. As we've added team members. So, there's certainly, from my perspective, a renewed energy level. Just turning the page.
Yeah, you talked earlier about some of what were your responsibilities, and we've offloaded some responsibilities, which is great. But we're gladly taking on new responsibilities.
Yeah, correct.
We talked about some of them, and we're not doing that for a pat on the back. We're doing it because we realize it benefits the organization and benefits us directly and
you guys are owners, and so you're a direct participant. It's exciting.
Yeah, it feels really good to be in this position.
It's great. All right, any last words before we wrap?
Onward.
Yeah. All right. Well, thank you guys. Sure. It's been great spending time with you. Appreciate it.
Thank you, Scott.
Thank you for joining us.